It is Friday, September 22nd, 2017. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And as you might expect, it was a terribly productive get your ass kicked at Jiu-Jitsu Friday, although it was kind of weird because we didn't actually do Jiu-Jitsu. We did wrestling instead. Apparently, there seems to be some sort of consensus somewhere that we're just not doing enough takedowns. And so today we did a little bit of work on a double leg takedown and then a couple approaches to a single leg takedown. And I've got to say, I enjoy taking people down. I enjoy takedowns. I haven't mastered the art yet, but I'm getting pretty tight with it. And I was able to go into some really interesting valley drops. And the last one, I actually managed to land on my opponent in a full mount, which I was very, very happy with. It took a little bit of angling with my ankles and my hips, trying to get it in the right position to do that. But it did work out as I had hoped. In any case, yeah, China. What the fuck is going on with China? They still don't know. I mean, it's like, I'm reading various reports. Some of them are saying, yes, we're being regulated, and then some of them are like, no, this isn't being regulated. And then I read John McAfee. He's like, the government banned Google like 5 years ago, and everybody in China uses fucking Google on their phone. So, it's how seriously do we really take the PBOC when it comes to this stuff. And in all honesty, I don't think we should take them seriously at all about it. I don't think we should regard governments very seriously either about it. But unfortunately, there are those that petition our government to try and force us to take them seriously, and unfortunately, they don't want to take us seriously. And so, they don't want to treat us like money because, it would require their exposure to our blockchains. And, of course, they aren't the entirety of the game. They're just a factor of the game then, and that's something they don't really like. In any case, we are going to go ahead and throw down some music. I have not actually picked anything out yet. You know how it is. Anyway, it's Friday. So, let's go ahead and throw down a little bit of Anthrax right off the bat. Breathing Lightning here on Coin Metal. And that was Slipknot with All Hope Is Gone. I don't generally like to play that song because, all hope is not gone. Even in China, with all the hubbub about their government and their bank and their whatever. Fuck, whatever. I've been involved in this space pretty much since the beginning. I mean, pretty much since the beginning. I think that maybe a couple months went by between when I read the Slashed article and that I was attempting to mine. Maybe a couple months. I don't even think it was that long. I think maybe a month, and I'd built a POS machine to use for that. In any case, the whole time there's been this specter of illegality. And this question of when mainstream adoption and all that other bullshit was going to happen. The problem with this is that people have actually tried to put into words the cycle of events that will occur before the vast majority of people on the planet Earth are using cryptocurrencies in their everyday life, willingly and knowingly. We're going through a multitude of them at once, at any one time, on multiple different levels. And because of that, we give a a state of current affairs kind of perspective on things. You know, because it's too hard to predict what the fucking future is going to be. I mean, nobody knew that this China thing was going to happen. I mean, maybe China knew, but or somebody in China knew, but it wasn't something that was widely known until relatively recently, a week or so now. But the thing is that we've always had the impression that at some point some government was going to do something to make it very difficult for us to operate within cryptocurrencies. And there have been a lot of predictions about how that would eventually play out, and invariably they always end up wrong. All of them end up wrong. I mean, we've made assumptions about hard forks, what would happen after a hard fork. No, completely wrong. There was all this scare that, the value would drop all the way out of Bitcoin and all that crap. It hasn't happened, And there have been other fears playing out. But the one thing that has always been the same, and has never changed and probably never will, and especially given the nature of cryptocurrencies, is that it's your choice. It's your choice to engage in these activities. It's your choice to use cryptocurrencies as quote-unquote money, because they can be used as peer-to-peer money. As a matter of fact, that's exactly what they were designed to do. And they were designed to do it better than credit cards. And they actually do it better than credit cards in the sense that we don't actually need third-party arbiters. Now, there's this big effort to reintroduce third-party arbiters and to be third-party arbiters in and of ourselves. And I think that's a bad move. I don't see anything wrong with being a third party if there's competition for your position, and that I don't have to pay for a license or some shit in order to compete with you. I don't know. I see this push towards professionalism kind of coming into cryptocurrencies. A lot of talk about certifications and shit like that you can get that will supposedly make you understand cryptocurrencies better than everybody else. It's just a bunch of bullshit. It's like this idea that you can predict the future. I mean, why bother taking a class in it? Just fucking go on Google, look up the word cryptocurrency, start investigating some of the coins that you find out about, and see which one fits you, or which one fits your situation. I mean, maybe you really like Bitcoin, and maybe you really want to mine Bitcoin, but you can't afford to at the moment. Maybe there's an altcoin that fits some hardware that you've got laying around that you could get into the mix with. But anyway, like I was saying, participation is what makes any currency system work. And I know I kind of ranted on and on about that last time, but it's a point that I think that too many people miss. It's like we get all caught up in this functionality bullshit of like all the wonderful things that we can get the blockchain to do and all that. Does the average person have any use for this shit? When I look at like Lightning networks and stuff, the average person isn't going to be opening up a fucking payment channel. They're just not going to be doing it. It's not something that I as a user want to bother with. I want to spend the fucking coin like money. Like I'm supposed to be able to. Like it was designed to operate. like it was designed to function as, you know. I mean, I find a lot of the publications that I read, I find them to be kind of offensive because they downplay this perspective of it. And it doesn't matter what currency it's about or what some government will do or whatever. None of that really matters. The only thing that matters is how will you value it. It's like Peter Schiff. I love listening to the man, but he always says stupid shit like, you know, it can't be used as money, or it's not money, or da-na-na-na-na. You know, he's got his own ideas about what money is, but he's so phobic of competition that he doesn't even concede that there's a possibility that other people will determine that it is money, that other people will use it as money, that it will fulfill their needs for what they need money to do. And that's what defines whether it is money to you. You know, maybe you only like Chinese yuan. I mean, and let's talk about that for just a moment. A lot of you are still unaware of this, but China set up a contract to be able to sell oil for yuan, and I think it's like it's also redeemable as gold. Now, this is kind of the same idea as doing a commodity-backed cryptocurrency, because in the in-between you have a fiat currency to determine the relative value of both the currency that you're trading it for and the gold itself. But it's kind of different in that it's like two of the sides are actual physical commodities, and the intermediary is the I guess the Chinese yuan or the yen, or I don't know. They have like a dual currency system or something like that. I don't know how that operates. Point being that they're divesting themselves of the dollar valuation. They're not even counting it. They're not even going to be they're not even going to be counting it into their transactions of oil. Okay, that's a real big one. Okay, because for the longest time we've been able to set the relative value of oil by our issuance policy at the Fed, because both oil and US dollars have a mutually recognized link between ourselves and other countries, oil producing countries. They are obligated to sell their oil for US dollars. So this guarantees that there's value in the US dollar because it's used to transact oil. Well, when you print a fucking billion of them a second, they lose value. And it causes all kinds of issues with regard to oil. Okay? And then on the other side, on the production side, you go and you start fracking like crazy, and you flood the market with that and stolen oil from Libya, Syria, and Iraq. And you're able to basically collapse the economies of oil-producing nations. Look at Venezuela. They are oil rich and money poor. This is not, you can't have this situation in a sane and rational market. You can't have this dichotomy. You can't have a world, a planet, a world economy dependent on oil, a nation full of oil, but a collapsed economy. You have to have significant manipulation on both sides, both the government side with the money and oil, in order to create that kind of situation. And that kind of situation is what's going to push people off of the dollar. We are going to see Venezuela and China getting buddy-buddy, and because the yuan and the whatever currency it is that the Chinese are using for in this contract for oil, and I should just look up the article about it, honestly. But anyway, if they start doing the same thing or extending this same offer to other countries that are oil producing countries other than the US, they're basically going to circumvent us entirely. And that's going to put us in a really precarious position, because we got this planet-wide empire to try and supply. And if we're no longer able to get the world to fund its own subjugation through transactions of oil in US dollars, then we're kind of in a really precarious position. And it's especially precarious given the fact that the only country that I can see that is as hard up to regulate cryptocurrencies as the Chinese are is the US government, which is really fucking stupid. I mean, I'm glad that we have somebody as business friendly as Trump in office, and plus I think he's also a little technically unaware, so that's in our favor too. He probably won't take us seriously enough to consider us a priority. Or if he's really, really smart, which I sometimes suspect him of being, he's just ignoring us because he knows it's better for the U.S. economy to ignore it. But the SEC, they're getting their nose up in our shit, even though each article that I've read concerning the SEC and their actions, concerning even ICOs, they have not brought charges against anybody. They haven't brought any charges against anybody. Even the fraudulent ICOs, they're just prohibiting them from being on certain exchanges. Now, it's not that you can't buy them or sell them. It's the same thing with Bitcoin over there in China. You can buy and sell Bitcoin, you just can't do it in an exchange. Or a couple exchanges. Although, I did read an interesting article, and I will be sharing that today on the other side of a music break, but I do kind of want to kick back into one. But before we do that, I just wanted to talk about this a little bit more. The public impression that we get from various articles concerning China and their whole grip on their people, it's quite different than we in the United States know. I mean, it's like from what I understand, they have more of the rule of man there instead of rule of law. And we don't even have rule of law. I mean, we just say we do. As soon as you start talking about like how much money somebody has and what level of lawyer somebody can afford to bring to court, then all of a sudden we're talking about bargaining. And that now we're renegotiating what charges we're going to bring against them and all kinds of stuff like that. But we like to say that we have a rule of law. I mean, but I see evidence. Jamie Dimon. Okay, you want to talk about some shit? Jamie Dimon. If he were me or anybody in our Telegram room, he would be up on ethics. He'd be in front of a fucking ethics panel, a congressional ethics panel, fucking explaining how he knew the appropriate time to talk shit about Bitcoin and the appropriate time to buy Bitcoin, which happened to be, of course, the same thing, the same time. Although his sentiments concerning Bitcoin were relatively well timed. I mean, it's like he had 2 or 3 days notice on the PBOC's decision. And as a matter of fact, somebody somebody in Europe, I guess it was, sued him or is trying to drop some lawsuit because of that. And it'll be really interesting if that actually goes anywhere. And I think given the series of events and the material damage that was suffered by people because of it, they might be able to draw a case. I would hope at least. But like I said, if it was me, shit, we'd be in court right now. They'd be fast tracking it. I find that kind of silly. If you want to call the United States a nation that is run by the rule of law, then that situation shouldn't be. Anyway, let's go ahead and throw down a little bit of music. I want some System of a Down, a little chop suey here on Coin Metal. And that was Megadeth with Loved to Death. Actually, that was Last Rites, Loved to Death. Anyway, you ever have a relationship and you loved one another until you killed the love somehow? Yeah, that's all about. Anyway, I've got this article and it's pretty long. I read it a little bit earlier and I didn't do much more than a brief cursory, but it seems to be the kind of thing that I would want to read on this kind of show, and so we're going to read it. And this was written by Daniel Jeffries, and although he does have I guess that's a Buddha, a happy Buddha picture there. I'm going to say yes, penis. Empire strikes back with coordinated war on crypto. On September 1st, 2017, Bitcoin roared to an all-time high, touching the $5,000 mark for the first time in history. And then the bottom fell out. While Twitterverse crypto enthusiasts called the sudden drop a natural correction, it quickly became clear that there was nothing natural about it. Over the course of 2 weeks, Bitcoin and every other crypto faced a sustained assault of relentless negative press designed to crash the price, spread fear, and destroy the trust in decentralized money. And it wasn't random at all. It was a coordinated attack on crypto. To understand why, you just have to know a little bit about the history of power in the world. The Empire Strikes Back. David Smook, the king of Hacker Noon, called decentralized cryptocurrency, quote, this decade's iconic battle of government versus business. Actually, it's more like government and business versus individuals, but we won't go there yet. And then there's a tweet here, David Smook, decentralized blah blah blah, iconic battle versus government versus business and technology is at the center of it all. Interesting. But there's more than that. It's not a battle between business and government. It's a battle between centralized empires of the world and a decentralized rebel alliance of everyday people. An eternal battle. And it's not just a battle, it's a war. It's been raging since humans first crawled out of the primordial swamp. It's a battle of freedom versus control, power to the people versus power of a select group of elites who've kept their jackboot on the face of humanity for thousands of years. Each generation must face the fight anew, like a pendulum that swings back and forth forever and ever. When the world goes too far in one direction, it must swing back in the other. Today, over-centralization is a disease. The pendulum only has one way to go. But centralized empires don't give up easily. Like Gollum clutching the dark ring, they'll do anything to hold on to that precious power at all costs. It's not even about what's good or what's right. It's about power for the sake of power. At first, the Dark Lords of the world didn't pay much attention to ragtag bands of rebels. They're scattered and disconnected. But then they sack a trade ship, or take a city, and suddenly the Eye of Sauron turns. And now the eye has turned towards cryptos. The Dark Lord's playbook is simple but devastatingly effective. Co-opt, coerce, corrupt, outlaw, and kill. And many of these were on full display the last 2 weeks. Corrupt and coerce. It started with China. First, they lashed out at ICOs, declaring them illegal fundraising, and no, they didn't. Of course, many applauded the move, while ICOs represent a revolutionary new way to crowdsource funding, moving beyond the straitjacket of, quote, accredited investors and VC money. The space was rampant with scams and questionable projects. While the crypto market initially reacted with a short drop, very quickly the trading public saw the move as positive. Bitcoin bounced right back up. They assumed China would make a freeze only temporary and provide better guidance to protect investors with simple legislation. But they were wrong. It was only the opening shot in a new wave of information warfare. Over the next few weeks, the news became a deliberate and coordinated drip of terrifying information designed to derange the market and spread panic. Instead of China regulatory news breaking all at once, like a normal story does, it kept dripping out in, quote, leaks and press releases and planted stories. Soon a story dropped in the Wall Street Journal citing only, quote, unnamed sources familiar with the matter, that China planned to shutter all crypto exchanges. Now the panic really set in. The sell-off started in earnest. Still, many of the pro traders were calling for HODL, aka holding your position and waiting for the price to correct back up. Most traders, including me, took the rational position that China would never ban exchanges because it made no sense for them to do it. We should have known better. Leaks don't just happen in authoritarian regimes. The regulatory groups and circles of power meet in secret in smoke-filled rooms behind closed doors. The people in those circles are chosen carefully for clannishness and absolute loyalty. Real leaks get people killed. The only leaks are deliberate ones. While the rumors swirled, the big three exchanges reacted with caution, saying that they had received no official word from the People's Bank of China, PBOC. But the optimism wouldn't last. Despite the fact that closing down crypto exchanges will only drive trading underground, rob the Chinese government of tax revenue, and crater their ability to enforce KYC or Know Your Customer style laws, the PBOC moved swiftly to attack exchanges. Right on schedule with the stream of negative news, the PBOC released a statement attacking the exchanges for running without a license. Now suddenly those exchanges that ran for years without issues need a made-up license to operate? You see, Chinese law doesn't work like Western law. Although the Chinese constitution provides legal, executive, and judicial powers, they're all subject to the whim of the Communist Party. The party is supreme. Courts and regulatory bodies don't need to follow any of those frameworks in deciding cases. China runs by rule of man, Renzi, not rule of law, Fazi. Essentially, it means that regulators can change the rules whenever they feel like, and that's exactly what they have done here. In classic rule of man style, the statement was overly broad, vague, and subject to interpretation any way they saw fit. a staple of bad lawmaking. Just drop it into Google Translate to see. Now the panic really set in as traders dumped faster and faster. Classic trader memes flowed fast and furious from top crypto Twitter accounts. A few days later, the first of the major exchanges, BTCC, announced it would suspend trading. A day later, the other two, OKCoin and Huobi, said they would meet with regulators. The day after that, they announced their own suspensions by the end of October. All hell broke loose. Bitcoin posted the largest one-day red candle in history as traders everywhere sold everything as fast as they could in a stampede of panic. And if it was just China news driving the market, that wouldn't be enough to call it a coordinated attack on crypto. The Chinese government has flirted with cracking down on Bitcoin in the past and even closed exchanges, but this time was different. Hot on the heels of the Chinese story, a storm of negative press flooded the interwebs. Out of nowhere, the CEO of JPMorgan, a company known for investing in blockchain technology, called Bitcoin a fraud that's worse than tulips. A few days later, JPMorgan's lead quant backed the attack, calling cryptocurrencies pyramid schemes. Soon after, CNBC was trotting out economist Mohammed El-Erian to say Bitcoin should be worth half what it is trading at, and that it would never achieve, quote, mainstream adoption, essentially the same argument they used against the internet, video games, ebooks, and digital cameras that are in your cell phone. Now the price of every single crypto was circling the drain, driven down by the relentless assault of information warfare. Innovative Chinese platforms like Neo took some of the biggest beatings. But why now? On the surface, none of this makes sense. The blockchain space has been booming. Investor money is flowing in. While there are certainly a number of useless projects out there, the space is filled with startups who will revolutionize everything from neighbors trading solar energy among themselves to supply chain management, with heavy hitters like IBM and Apache Foundation backing the technology. But when looked at through the lens of the eternal war between centralization and decentralization, it becomes much clearer. Guerrilla warfare. For years, cryptocurrencies have ripped along, mostly under the radar. Early verbal assaults on coins were weak and didn't do much to dampen enthusiasm among adherents to the crypto creed. Back in 2013, when the first attacks started, the market cap of Bitcoin was tiny, a mere speck of the global economic pie. It traded around $10 to $20, not much for a centralized empire to worry about at all. Those attacks were simple and straightforward, such as saying that only drug dealers and criminals use Bitcoin, usually by calling attention to Silk Road. Big government bootlicking economist Paul Krugman posted a now infamous missive in the New York Times called Bitcoin is Evil, describing it as a weapon intended to damage central banking and money issuing banks. No, just compete with them. But the attacks didn't stick. Bitcoin's price continued to rise, despite laughable obituaries getting written almost weekly. In fact, the only thing that brought the mighty money badgers' rise to a grinding halt was an actual crime, the hacking of Mt. Gox, the most well-known early exchange. Hackers made off with 850,000 bitcoins, more than $450 million at the time, making it one of the most audacious heists in history. Even with Bitcoin's recent price slide, those coins are now worth upwards of $3.1 billion. That's a lot of money. And it was a serious blow. If exchanges can't keep money secure, they're unusable. The attack brought the crypto winter, and the prices of every major coin remained depressed for over a year. But they've been on a tear ever since, rising from under $300 in the aftermath of Mt. Gox to $5,000 at its peak this year. New cryptocurrencies like Ethereum sprang onto the scene. They look to address the shortcomings of the original crypto king by providing Turing-complete programming languages, smart contracts, and more. This year, ICOs raised more than $1.5 billion, outpacing VC money as the number one way to raise cash, but doing it all from small investors like Kickstarter on steroids. Projects designed to do everything from decentralized DNS to identity management and distributed storage started making waves, promising to upend the way we do just about everything in technology. Even the companies and governments that initially laughed at the ideas behind Bitcoin started to understand the breakthrough power of the technology behind it, the blockchain. No longer would you need to go to one of the three central companies to get a web certificate or register a domain name. You could go to a decentralized web of trust that no one group controlled. Along the way, Chinese miners came to dominate Bitcoin. Today, they make up about half of the mining power on Earth. Their entrepreneurs built the fastest ASIC chips designed to mine coins at astonishing rates and filled up huge data centers to run them. At the Consensus Summit this year, an industry trade show, the halls were covered with familiar logos like IBM, Deloitte Touche, and JP Morgan. Wait, what? JP Morgan? Aren't those the same guys that were ripping Bitcoin a few weeks ago? That's right. While CEO Jamie Dimon was pissing on Bitcoin, his office was hosting crypto venture capitalists and crypto investors in San Francisco, and his analysts were lauding the technology in their own papers, calling blockchain the real deal. While the notion of blockchain may seem novel, the underlying technology is not new. It is the combination of proven existing technologies, peer-to-peer networking, asymmetric cryptography, and cryptographic hashing. See in plain English. And Bitcoin was the innovation that combined these technologies, offering the ability to transfer value while preventing double spend in a trustless, pseudonymous, publicly available system. Oh yeah, and at Consensus, JP Morgan announced they would integrate the anonymity technology behind Zcash, another cryptocurrency, into their own blockchain technology. Monday, the company behind Zcash, the zero-coin electric coin company, ZEC, announces a partnership with JP Morgan Chase to add Zcash's privacy technology to Quorum, an enterprise blockchain platform JP Morgan built on Ethereum, a network similar to Bitcoin's but focused on smart contracts. Wait. JP Morgan has their own blockchain too? You betcha. So what the hell is going on here? How is it that the Chinese regime turned its back on a technology that entrepreneurs dominate, while big banks like JP Morgan tout the power of blockchain and the innovation of Bitcoin, only to try and destroy the technology that created it? Simple. It's all about power and control. Barbarians at the gate. For the first time, the powers that be have started to realize that cryptocurrencies aren't just a toy. As the Russian minister said, they're now impossible to ignore. They're also impossible for any one group or nation to control. And that's just what banks and authoritarian regimes of the world fear. You see, Companies like JPMorgan have dominated finance for more than 100 years. They've acted as the intermediary between us and our money. They're so powerful that JPMorgan once bailed out the U.S. Treasury. That's right. One company bailed out the entire U.S. government. And when you act as the choke point that everyone has to go through to get the most precious resource in the modern world, that's not a power you let go of lightly. In fact, you'd do anything to keep that power. On the other side of the world, Chinese government holds even more power than the banks here. The Great Firewall maintains strict control over what their people can see and hear. Currency controls keep their rapidly growing middle class from taking too much money out of the country. The government employs more than 2 million censors to crush dissent online across social media. If you want to protest the millions of people who've disappeared with no trial into black jails, the censors will make sure you can't say a word. And lately, they've cracked down even harder. They recently banned the use of VPNs that tech-savvy Chinese citizens have always used to get around the ridiculous limits of the Great Firewall. All this is coming because China typically brings the hammer down on all dissent before its big 5-year meeting of top Communist Party leaders. They don't want anyone protesting the rules they make for them without their consent. But this feels different than past years. This feels like fear. One of the most powerful companies in America and the most dominant force in all of Asia see cryptocurrencies as a major threat. They see them as a powerful, swiftly gathering storm that can level the playing field against their absolute stranglehold on every aspect of our lives. So they've gone on the attack. The blueprint of fear. Both attacks fall squarely into the playbook of co-opt, coerce, corrupt, outlaw, and kill. Let's start with JPMorgan. Their attack is trivially simple. It's a confidence game. They want to destroy faith in decentralized money to reaffirm faith in centralized money. And since money isn't backed by anything but our faith in it, that's a very powerful attack indeed, and it's been working for the last 2 weeks, driving down the price. JPMorgan CEO Jamie Dimon went on his epic rant after his own daughter dared to buy Bitcoin. It's because he knows his job is obsolete. His company has acted as the middleman for a century, and now the jig is up. Clearly, his daughter knows more about the future of money than he does right now. Good for her. And of course, the unbelievable arrogance of him calling Bitcoin a fraud boggles the mind, considering that the number of times his company has been convicted of actual fraud is astonishing, amounting to billions of dollars in settlements. And just in a minor segue on that point, I've done a loose estimate of how much JPMorgan is paid in fines and shit to the U.S. government and via the SEC, FDIC, all those fuckers, and everybody who sued them. In the last decade, they have paid more in settlements. And this is just off of a cursory basic estimate. Okay, they have paid more in fines and settlements than the entire fucking market cap of cryptocurrencies at this date in the last decade. And as this article points out, they've been in operation for a century, so I can guarantee you they've paid way more in settlements than we will earn in probably at least the next decade. Continuing on. Let's also remember that his firm and their quants helped orchestrate the greatest and most devastating fraud in modern history, the collateralized debt obligations scam, that brought the housing market to a screeching halt, destroyed millions of American lives, crashed the world economy, and slammed us face first into the Great Recession. The scam was simple. Take a bunch of AAA-rated mortgages, lump them together with some garbage mortgages, and then sell them all as a derivative that is still rated at AAA. Maybe you're still under the impression that it wasn't a scam at all, that it was just a natural cycle of boom and bust. Housing prices go up and housing prices go down. But let's take a closer look to understand why that's just not the case. You can check out the delightful Margot Robbie in The Big Short movie explaining it all in 2 minutes or less, but I've whipped up my own analogy to help as well. Imagine that you have a box of deluxe chocolates. You could charge a premium for those candies, right? Put a pretty bow on the box put a pretty bow on the box and mark up the price. Those premium candies are still AAA rated mortgages because the people who took out that money to buy a house can pay the money back. You make money as an investor by buying up that debt ahead of time at a lower price, and then you can collect the mortgage money over many years at a higher price and come out way ahead. Now imagine that someone takes out half the chocolates and plunks down dog shit in there instead, after they paint up the turds with black ink to make them look like deluxe truffles. And then they charge you the same price as the premium box. Still sound like a good deal? Those painted those painted shit bags are the mortgages that will never get paid because they were sold to people who couldn't afford it, rolled in with the premium mortgages, and sold at the same price as the deluxe box of chocolates, as if nothing had changed at all. If that sounds like fraud, it's because it is. Actual, literal fraud. And they got away with it. Not a single person went to jail for it. In fact, we gave them even more money to make sure they didn't go bankrupt for perpetrating this mass ripoff on the world. The taxpayers, aka you and me, gave them, $12 billion additional dollars for cheating us, crashing the economy, and then ratcheting up the debt worldwide to utterly unsustainable levels. Zero Hedge reports that global debt now stands at a record high of $217 trillion, more than 327% of GDP. Yes, that is trillion with a capital T. That's a lot of unpaid bills, and a lot of cans kicked down the road. The people who caused this looming humanitarian disaster are the same people who are telling you that Bitcoin is a fraud. The sheer audacity of it is utterly incredible. I guess you can admire their cojones, right, though, right? I mean, if you're going to lie, just go all in with it. Oh, and while you're speaking with forked tongues about fraud, they're also investing in the technology, which brings us to our second attack. Their second attack. Co-opt and corrupt. They're building their own blockchains and their own coins. It doesn't matter that a single company controlling an entire blockchain is utterly worthless. That's not a blockchain. That's a database. It provides utterly no additional value whatsoever, but they're doing it anyway. As Naval Ravikant, founder of AngelList, says, it's nonsense to have blockchain controlled by a sovereign. It's nonsensical to have a blockchain controlled by a sovereign, a corporation, an elite, or a mob. Absolutely. Why is it nonsense? Because the true power of blockchains comes from distributing trust across an entire system, an entire ecosystem. Contrary to popular belief, trust is not a fixed concept. Trust is a moving concept. If we entrust all of the power to a single entity and that entity goes bad, we're screwed. Just check out our good friends at Equifax, who couldn't keep our data safe and managed to leak the personal information of half of the United States. Oh yeah, Equifax provides root certificates on the web as well. Oh shit. That's why blockchains use a twist on the web of trust concept. They spread out trust so that untrustworthy central entities don't get to keep our trust after repeatedly violating it again and again. They're a check and balance on everyone in the chain so that no one group can complete control over everyone else. If the bank, its shareholders, or its regulators, and all of its deposit holders hold the keys to the blockchain, then you have a true distribution of power. Only the rules that everyone can agree on will get passed. That's the essence of democracy in action: checks and balances. But a bank coin is owned by just the bank. That's the same old broken trust model we've always had up until now. So why are they doing it? Because if a bank owns all the keys, they can do what they always do: change the game on a whim, defraud the public as they see fit, and make you foot the bill for it while laughing at you. They want centrally controlled blockchains because they can go on rigging the rules in their favor forever. And the Chinese government wants the exact same. So, let's turn our attention across the sea for a few moments. The Chinese dynasty redo. The very first emperor of China outlawed local currencies and made one coin to rule them all. He did that to make sure that nobody else could stand against him. China still uses a dynamic system, whether they still call it that or not. A rose by any other name is still a rose. The dynasties of China never really went away. They just transformed. The PRC is nothing but an extension of the same system that's ruled China for the last 5,000 years. One emperor or one party makes no difference. It is the same. Either one guy makes all the rules or 1,000 guys do. And its methods are the same. While both China and JP Morgan's assaults amount to an attack on confidence designed to destroy faith in cryptocurrency, China takes it one step further. Their rulers just leapt head first into using the law as a weapon. It started with banning ICOs under the guise of protecting the public, then banning the exchanges for being unlicensed, even though no such license exists. Oh, God damn it. There we go. That's better. That works because some people see law as good no matter what. If the law says everyone has to jump off a bridge tomorrow, that's the law, and law is good. Everyone better start jumping, or else. But a law is only as good as the people who wield it. In a just society, the laws are just. In an unjust society, the laws are unjust. That's why every major atrocity in the history of man, from the mass slaughter of Native Americans to the Holocaust, was, quote, legal. Jihan Wu, owner of the biggest Bitcoin mine on the planet, jumped in to say that exchanges should retroactively require that made-up license. None of the Bitcoin exchanges in China has licenses that should be required for order book exchange. Such law is older than Bitcoin. Really? Okay. I guess he better hope the government doesn't decide to invent a license to run a Bitcoin mine too, and then seize all his profits. First they came for the Bitcoin traders, but I didn't speak up because I wasn't a trader. Then they came for the Bitcoin users, but I didn't speak up because I wasn't really a user either. Then they came for the miners, and there was nobody left to speak up for me. China's regime clearly recognized the disruptive power of the blockchain, and they want to capture that power like lightning in a bottle. They want to make sure they don't lose control of the money supply because money is power. In other words, they want to make sure they don't get disrupted too. It's a little bit late for that, dude. That's why they're working with private companies like Deloitte Troche to build their own state-sponsored cryptocurrency. If that sounds ominous, that's because it is ominous, even though Deloitte put that up on their website without a trace of irony. Wow. And I might just investigate that. Just like American companies helped China build the Great Firewall, Deloitte's consultants are helping China create a crypto with a backdoor into every transaction, which will help them monitor and control every aspect of their people's lives. It will grant them the power to remotely turn off your money, like turning out a light. And that would actually be a brand new power for China's dynasties. There is an old proverb, heaven is high and the emperor is far away. It means that the country is too vast and its people too scattered for the emperor to keep an eye on everything. Despite the iron fist of the party and other emperors before him, the Middle Kingdom is actually incredibly decentralized in many ways. The only way that the regime can keep a hold on their citizens is through a show of force. They can't stop everything they hate, so they might pick a random group of people and punish them with a vicious show trial. They've mastered this charade in places like Tibet, where they put a professor in jail for life when they couldn't get a handle on the constant wave of uprising in the far western Xinjiang province at the edge of the world. It's a classic use of the violence hack, the one hack to rule them all. Pick a random person, kill or imprison him, and you let everyone know it could happen to you too. Controlling all digital money would amount to an unprecedented new power in the hands of the PRC. If they're successful, they'll have a crippled, centrally controlled money system that spreads power of the emperor across the land, putting the Eye of Sauron into every single pocket and smartphone, giving them a two-way lens into every aspect of their people's lives. Think of it as Panopticon Money. I think we've talked about that before. Inglorious bastards. If all that sounds like a bunch of folks who don't deserve a lick of trust trying to jam a false narrative down your throat, that's because it is a bunch of untrustworthy bastards trying to jam a false narrative down your throat. Here's the thing though, in the long run, none of these attacks will work. First off, nobody trusts the big banks not to lie to us. We've been burned too many times. They can crow all they want about fraud, but everyone knows the emperor has no clothes. The collateralized debt obligation scam was their last get-out-of-jail-free card. The debt bubble is building again, but it's bigger than it was in 2008 by an order of magnitude, and when it pops this time, none of them are getting a bailout or escaping a cell. Cryptocurrencies are built to survive chaos. That's why they thrive in failed states like Venezuela, where the people are starving and their money is worthless because of idiotic socialist rulers who have failed them. In the last few years, billions and billions in smart money has poured into thousands and thousands of blockchain projects. Someone is out there right now working on the killer app. The one that will make cryptocurrencies take off like a rocket ship. And when we hit that Mozilla moment, traditional companies will rush to embrace it and defend the powerful new marketplace of ideas, because now they have something to lose if it goes away. And we're already hitting that point. And the countries that stand against the blockchain will have that mistake blow back on them with terrible fury. If China crushes the exchanges for good and cuts off mining, their historical enemies like Japan will simply embrace it with glee, as they already have today. Their citizens will only go underground with it, and they'll lose any hope they have of enforcing KYC and stop massive capital flight, especially as their house of cards economy crumbles. The Chinese are masterful at faking GDP growth. They've taken shovel and pour contracts to an epic level. Each local party boss is tasked with a target growth rate every year, usually an insanely impossible 7% or more. There is simply no way to achieve it legitimately. What do you do when you don't have enough entrepreneurial spirit to grow at a faster clip than internet companies in the 1990s bubble? Build a bunch of useless crap. China used more cement in the last 3 years than the US did in the last century. They build entire cities where nobody lives. They're called ghost cities. That's not real growth. That's fake growth. And the worst irony is that if they go after their own miners, they'll only end up crippling their most innovative real entrepreneurs. The biggest Bitcoin miner in China recently turned their chip designers loose on the power of AI, creating a deep learning ASIC. AI is a technology China wants to dominate in the coming years. If the government seizes their Bitcoin mines and cuts off their primary source of funding, that chip will never come to market, and they'll lose their chance to shape the future of all technology. Once again, an American firm or a European one will dominate chip making for decades. Actually, it won't. The time interval won't be that long, but it will suck for a little bit. The aftermath. You may think this is the death knell for decentralized money. Think again. Cryptocurrencies are amazingly resilient already. The markets are shaking off the attacks. Bitcoin and cryptocurrencies are bouncing back up fast. They move at video game speed. If a traditional market takes 3 years to recover, Bitcoin takes 3 months or 3 weeks or even 3 days. That's because Bitcoin and cryptos are bigger than any one country or company. If someone doesn't want to play nice, they won't get to play in the sandbox at all. And if countries drive their citizens away from legitimate avenues to participate, they'll only adopt illicit ones until that country realizes the terrible error of its ways. In the wake of ongoing attacks on crypto, privacy-focused cryptocurrencies like Monero, Pivx, Dash, and Zcash, and what the fuck? What? No mention of Verge. What? Fuck you, asshole. Are looking hotter than ever. Lightweight mobile wallets will make them even better. Even Ethereum is looking to roll in the privacy tech behind Zcash, starting with their rapidly approaching Metropolis hard fork. Expect them to deliver a big return in the coming months if the wave of misinformation continues. The highly respected International Business Times just ran a story about the power of Monero to stop mega data breaches like Equifax's disastrous breakdown, which will cost Americans billions of dollars as hackers gleefully open credit cards in our names. If you've worked in computers for more than 10 minutes, you know the truth. No central company or country can keep our data secure. They have to play perfect defense, and the hackers just need to score once. There is only one way to keep our data safe. Don't keep that data at all. Privacy isn't just a nice to have in a stable and secure society. It's an absolute necessity. That's why the founding fathers of the United States gave us the Fourth Amendment. The right of the people to be secure in their persons, houses, papers, and effects against unreasonable searches and seizures shall not be violated, and no warrants shall issue, but upon probable cause, supported by oath or affirmation, and particularly describing the place to be searched and the persons or things to be seized. If they were writing it today, they would have included the right to be secure in our digital devices and papers too, because they grew up in a totalitarian society where the empire could make laws without their consent, put up soldiers in people's houses and make them foot the bill, and charge people in secret courts. Decentralized cryptocurrencies give people back privacy and control over their lives while balancing the need for law and order. Every healthy society needs both. The only people who don't get that are the same people who have never gotten it because they don't care about anyone but themselves. The banks can't keep their crappy shitcoins. Nobody will buy them. We're not fooled. And countries like Venezuela can keep their hyperinflated money, and socialist powermongers too. Today the banks and central powers have all our money, all our gold records, and all our former hits. But we don't need it anymore. They can go ahead and keep all that shit. Like Dr. Dre, we're moving on to bigger and better things. We're taking back our lives and our money. The empire may have struck, but the aftermath has only begun. And I agree with a lot of this, even though it was very, very, very long-winded, and they did not mention Verge. Fucking asshole. And I think they're right. Although, I've got to say this. Verge was amongst the first of the privacy-centric coins. As a matter of fact, we were here. I'm pretty sure we were here way before Monero was. I'm pretty sure we were here before Ethereum was. Yeah, and Pivx and all that other bullshit. Anyway, point being that, yeah, I agree with the sentiment that I expect that what's going to happen is that they might push this a little bit further, but there's other shit going on. And as a matter of fact, we're going to be talking about some of that, because that article covered a lot, but there's actually more to the story, and so we will be getting back to that on the other side of a music break. But I really need to wet the whistle and smoke something, and you know how that is. And yeah, seeing as that was audaciously long, we're going to go with Annihilator, Word Salad, here on Coin Metal. And that was Prong with Absence of Light. Ah, yes. And so, I don't know, thinking about that article, it's kind of indicative of how far ahead Verge and a few other currencies really are of this curve. Because, I mean, in all honesty, the necessity for especially anonymous coins hasn't, I don't think it's fully become necessary. It's like it's nice to have at this point. It's a desirable trait of a currency at this point. However, in the longer term, I believe that it will be the difference between survival and not survival for some people. And I hate to think of a situation that would develop that would be like that, but it's possible, you know. And I don't know. I think that's the natural progression it looks like that we're heading towards. So again, we're just that much further ahead of the curve with sticking with and creating cryptocurrencies that allow us to operate openly and digitally, but still privately. But we still have yet to fully close the loop, and I wish to do that at some point, like where I'm managing a website that does fishing tackle sales, because that's my thing, and be allowing transactions to happen from like me to the from the customer to me to directly to the manufacturer, like not even a distributor, a manufacturer. Now, of course, if there's some sort of thing between the manufacturer and the distributor where they're kind of in a mutually beneficial contract at the moment, you know, at some point I'm sure that would be negotiable, because the distributor, unless he could be maintaining his value to the manufacturer via actual distribution, would be, you know, getting replaced with somebody else. Anyway, and I think as Amazon is showing, that we don't even really need the manufacturers. You just manufacture the shit yourself. But that's kind of an idea I have. Is I have a lot of ideas for fishing lures and stuff that I don't necessarily want to give other people credit for, you know, but I'd be willing to accept Bitcoin for them. So there's that. Anyway, I've got an article here, and we were talking a little bit about this, and this is a little bit of that coordinated attack business that the guy was mentioning. Although I think there's an even bigger attack going on, but we'll see in a couple months exactly how that plays out. But anyway, I got this article here. It's on newsbtc.com. Jamie Dimon accused of market abuse regarding comments on Bitcoin. And this is written by Rick D, so clearly penis. And it was authored on the 22nd of 2017 at 4 p.m., so about 6 hours ago. Assuming, of course, this was Pacific Standard Time. Anyway, continuing on. In response to Jamie Dimon's misguided comments about Bitcoin last week, one firm has filed a market abuse report against him. Blockswatter, an algorithmic liquidity provider, raised issues of market manipulation as well as accusing Dimon of deliberately distorting the public perception of cryptocurrency. According to London-based Blockswatter, the JPMorgan CEO violated Article 12 of the European Union's market abuse regulation when he denounced the cryptocurrency as a fraud and said that any employee trading in digital assets would be fired for being, quote, stupid. They alleged that Dimon, quote, knew or ought to have known that the information he disseminated was false and misleading, and that his statement was negatively impacted the reputation and price of Bitcoin. Blockswatter's managing partner, Florian Schweitzer, said, quote, Jamie Dimon's public assertions did not only affect the reputation of Bitcoin, they harmed the interests of some of his own clients and many young businesses that are working hard to create a better financial system. Shortly following Dimon's outbursts at cryptocurrency, it emerged that JPMorgan was one of the most active buyers of Bitcoin tracker fund called Bitcoin XBT. Finance blog Zero Hedge picked up on this and accused JPMorgan of manipulating the market to pick up Bitcoin cheaply for themselves or helping clients to do so. However, a spokesperson for the company responded to allegations with the following, quote, "They are not JP Morgan orders. These are clients purchasing third-party products directly." Yeah, whatever. Fuck you. Bullshit. It's called plausible deniability, and if you're new to that concept, you're new to JP Morgan. Although the crime of market abuse is punishable by up to 2 years in jail, the Swedish Financial Supervisory Authority did not confirm whether or not they're looking into the matter yet. JP Morgan has refused to provide comment thus far. It looks like Jamie Dimon should have followed the advice offered on Twitter by former JP Morgan executive Alex Gervich in response to the comments he made regarding cryptocurrency. It is yet to be seen how the complaint will pan out and whether there are going to be any inquiries or not. Yeah, well, here's the thing. These laws exist for a reason, and they are no doubt practiced. If they're practiced against anybody, they need to be practiced against JP Morgan as well. I mean, it was a clear case of market manipulation, and I don't really give a fuck what he says about, it was some fucking third party. Give me a fucking break. Like, a bank as huge as JP Morgan can't distance themselves far enough away from a transaction on paper in order to make it appear as though it was a, quote, third party acting independently. Give me a fucking break. I mean, I could make it look like a fucking independent third party bought Bitcoin on my behalf. But it would still be me. It would be me, but through a third party that is representing me in some way, shape, or form, or not necessarily representing me, or not visibly representing me, but associated with me, maybe contained under one of my umbrella corporations, which I don't really have, but point being that it was for demonstration purposes here that you could easily layer in I think the IRS even has a word for it, structuring. You could structure your decision-making process in such a way that no actual movement or actual action in and of itself could ever be attributed to any one executive at any one time, unless, of course, the person was actually caught on video or audio stating or doing such a thing. But even then, you'd have like 1,000,000,001 ways that you can explain away their statements. I'm sure that there's somebody working on a plausible explanation for Jamie Dimon's statements concerning Bitcoin. It's like, oh, well, he doesn't really represent he's not really CEO, he's just a titular head, and whatever. They've got 1,000,001 ways. They've got a PR department dedicated to working on this exact fucking issue. Because, they want to minimize their actual, bank, whatever's, when the FDIC hammers down on them, or the SEC, or whoever it is, or FTC, or CFTC, one of those guys decides to throw a snowball across his bow. I mean, nothing would please me more, really. And it says something, again, that they are trying to develop their own blockchain. Now, I've already addressed this. A multitude of times on this show. And if you listen to this or you're a subscriber, you already know this. That there are parties within our government and there are parties within cryptocurrencies that are seeking to create a situation where the likes of JP Morgan Chase or Bank of America or a few others would be the sole arbiters of Bitcoin or cryptocurrency transactions. The problem again is choice. If at any one time you decided that it's quite clear that an exchange or a coin is clearly being manipulated or is in association with JPMorgan Chase or the Federal Reserve or the central banks or the PBOC or whoever that you object to, you don't like the value system of that particular finance organization, you now have the capability of bowing out because they no longer have that monopoly force over you. And that's the really big point here, is that they can make their decisions, and they can go and they can arrest people, and they can close down exchanges and require of them licenses that they haven't even created yet. But what they can't do is stop people from using cryptocurrencies. They can't even do that within China. And it's really telling that in all of these things, they never really say that that's what they're going to do. Because, in fact, saying that would make they themselves criminals, because they are operating within cryptocurrencies. The impression that one gets by reading that article is that cryptocurrencies have not been, to date, under massive assault from those same entities, both government and private. And the fact of the matter is quite different. I posit that every time that we've had an exchange hack and those coins mysteriously disappear, that there's never any account for, oh my gosh, where'd those coins go? It's like this fucking monkey that got nailed recently for moving coins that were in association with Mt. Gox, or the Mt. Gox hack. I bet if you investigated far enough, you would find out that he was one of the guys that actually bought it off of somebody else, and then thought that was deep enough for them to be able to move it back over to BTCC and sell it. But unfortunately, one party was not far enough, or they didn't bother to go further up the line, the next transaction in line, which was actually a government agent, or somebody working for Goldman Sachs, or somebody working for, some other bank, some other central bank. I mean, come on, folks. How many times do we have to see it where some terrorist suspect, where it turns out where he was actually groomed by the FBI and then arrested by the FBI as a terrorism suspect? So, anyway, I digress. I posit that every time one of these hacks has happened, and there have been several of them, there have been like 15, maybe 20 significant exchange hacks that cost millions of dollars of customer funds, and there's minimal investigation. There's minimal accountability being made. And you can't tell me that those millions of dollars worth of coins didn't come back into circulation somewhere. And so is it that they're not all being investigated, or that they're being selectively investigated, or is it because they are investigated, the record is public, and what invariably happens is the investigator finds out that it was somebody paid by Goldman Sachs, or somebody paid by JPMorgan Chase, or somebody paid by the Federal Reserve to do the fucking hack and take the fucking money and then spend it out into the open. And then the investigation stops because they don't want to end up dead in a river somewhere. But every one of these hacks, you notice that if you really go back and you do a comparison of like when the hacks happened and when price fell, you'll notice that there was always a decline in price. Well, it was because these fuckers were selling off. And of course, there was no accountability for it. Just the liquidity would just, hop back up into the fucking marketplace and, oh wow, look, I got some Bitcoin. Cool. I made some money. And again, no question, and I would be willing to bet it's other exchanges cycling the coins back into circulation knowing that they were from hacks of other exchanges, and just accepting the coins because, hey man, business is business. This is crypto. And that's expected, an expected feature. However, I think it's been happening at strategic points. Every time if you look at the chart, the Bitcoin price would start going up and reflecting real world inflation in US dollars and other fiat currencies. And all of a sudden this hack would happen and there'd be a big ass fucking unnatural drop in price. And then we go along again and the price would start reflecting real world inflation on fiat currencies again. And then another fucking hack would happen and we lose $10 million here, $20 million there, sold fucking back into circulation, price tanks, people panic, they sell off, price tanks, and then comes back up and it starts reflecting normal fiat inflation. And we can expect that to happen throughout at least the next 3 or 4 years. But here's the thing, and it's something that very few people actually talk about, is the lack of guarantee of trust via regulation. Equifax, one of the most trusted fucking companies, clearly by the amount of deference they've been given, and yet what did they do with that trust? They got hacked on July 29th, and they didn't bother to tell anybody about it until middle of this month. And as I've stated before, that was 100% legal according to the regulations that Equifax is operating under. The courts will go through it and they'll look at the fucking calendar dates and they'll be like, oh yeah, these guys were within the window. They missed one, but they paid the fee for it, so it's all good. Give me a fucking break. And worse yet, these fucking people think that they can regulate cryptocurrencies. I mean, shit. We know down to the fucking Satoshi what the hell's going on out there. We can check it at any time. And a lot of us are. A lot of us are checking it all the time. And so, they see something aberrant, they see something weird, they're all over fucking social media about it. And it's not enough that you can monitor one or possibly two social media outlets really hardcore. There are several social media outlets that you can't. That are more or less interlinks between individuals and nothing more. They can make phone calls. They can make instant messages over a wide spectrum of different applications. And you're not going to be able to stop all of them. And so the information is invariably going to get from one person it matters to another person it matters to. And then it will matter to enough people that we will fucking do something about it. Because that's the way this shit operates. Anyway, let's go ahead and throw down for one last short little break into music, and then I want to read another article, and we'll close it out, because we are into our last bit of our last hour here. So, what to put on? Let's throw on a little bit of Push Monkey here now, here on Coin Metal. And that was Sixth with No Wishbones. And I'm in a debate now exactly which one I want to read, because I have a few here. And let's see how long this one is. Oh no, that's a whole different subject. This one's kind of long. This is kind of interesting. And you may have noticed there's been some updates going on your devices, your Android devices. What I suspect is going on is that most of the apps that have a interface for spending money, they're adding in their XBT or BTC, one of the two, or maybe even both, or maybe multiple symbols for money. So here, I've got this article here from bitsonline.com, and this one was written by Evan Faggart. Gosh, I haven't heard from him in like forever. I'm sure he's been busy and whatnot, but I mean, for whatever reason, I've just never run into one of his articles here. Anyway, this one was authored on September 19th in 2017. Google accepts Bitcoin with Payments API update. It looks like Google has finally jumped on the Bitcoin bandwagon. In a new update to its popular payment request API, the tech titan added the ability to request Bitcoin payments. The news came with little fanfare, just a small blip in a much larger API update from the Web Fundamentals contributor Matt Goundry. My apologies. The update mainly consisted of a tutorial on how to use the new features of the update. Towards the bottom of the blog post, Goundry explains how the API can be used. You can pass in any 3 characters and it will be treated as a valid currency code. The reason for this is that it allows support for future currencies. For example, Bitcoin can be supported with its currency code XBT. The currency code is always displayed in Google Chrome at the time of writing, but only known currencies will include the currency character with amounts, otherwise only currency code is known. Compare the screenshots below for USD and XBT, blah blah blah. Wow, that's interesting. Bitcoin payments for everyone? What are the implications of this update? In theory, anyone that uses Google Payment Request API can accept Bitcoin in their online stores. According to Goundry, the new functionality that enables Bitcoin payments... pardon me. I could feel that one coming on, sorry. Is meant for accepting future payment methods that don't fall under official list of methods. So in theory, the API could support any currency as long as it has a 3-letter code. Talk about competing currencies, merchants can potentially accept any digital currency under the sun. By using Bitcoin as an example for how this new utility works though, Goundry, intentionally or not, has suggested that the future might already be here. Let me tell you something. This fucking article right here should be up on like the New York Times or but it won't. I mean, but it's here, of course, but that's because we are who we are and the kind of shit that we like to cover. Anyway, I'm going to retweet the URL for this because, like I said, this is some fucking big news. Okay, I mean, if you're doing anything with Google or their payment system, this will be of great use to you in potentially accepting any cryptocurrency you want, not just Bitcoin. I mean, you could set it up for Verge. Holy shit, wouldn't that be cool? I wonder if we even have a payment code. I had to check that out. Anyway, yeah, that's fucking huge right there. I mean, and especially I've seen it I've seen it referenced a few times, but supposedly the Chinese are just all over the fucking Google, despite the fact that they're basically prohibited from using Google via the Great Green Firewall of China. However, somehow or another, they're circumventing that. Of course, or VPNs or whatever. But there are other methods I'm sure that they're utilizing. Oh, shit. Must be getting near my bedtime, man. Shit. Anyway, the point being that the shit is changing really, really fast. You know? And Google stepping up like this, I think that's really fucking big. I mean, again, if you're using the Google payment system for anything now, you could be accepting cryptocurrencies, and they've got a really fucking broad distribution. They've got millions and millions and millions of users. So, I mean, it's like having kind of a small country as a captive audience, you know? Not really captive, but I mean, certainly monitored. I don't know, I think it's a good thing, bad thing. I mean, only because Google is already evil and whatnot. But I think ultimately they might end up doing more good than evil. By becoming evil, they might end up doing good. I don't know. It's tough. It's like that the shit. What's her name? I can't remember her name, but in that there's a movie recently, fucking, and it's I'm completely losing it. Shit, it was one of the Marvel Comics movies. Mystery Man or Doctor Strange. That's what it was. Anyway, his Sifu, she has the dark power, whatever, or she uses the power from the dark side, but she's very selective about the way she uses it and whatnot. Maybe Google could become that. I mean, in a good future, a non-dictatorial future, that would be the case. But I don't know. I think both options are still on the table at this point. That we could go either way. But I do have one more article here, and this one is on the Sydney Morning Herald, and I caught this one and it seemed fucking hilarious. This is written by Scott Phillips, and I have not read this yet. So, but clearly Scott has a penis. Bitcoin's not a fraud, but don't risk it. And this is written on September 21st, 2017, 11:30 a.m. I'm assuming Australia time. Continuing on. I've lost count of the number of times I've been asked about Bitcoin as an investment. And it's no wonder. If the cryptocurrency hadn't been invented by a shadowy tech guru, it could have been the stuff of a movie director's wildest imagination. Take the aforementioned, quote, inventor of Bitcoin, who may or may not be one of the half dozen people suspected of being behind the pseudonym Satoshi Nakamoto. Then add in the fact that his invention came to prominence on the eBay for Criminals website Silk Road, and that the libertarians love it because there's no role for government and you can't be identified. I can almost see Matt Damon in the role of action hero Jason Bourne or Daniel Craig on Her Majesty's Secret Service as Bond, trying to bring the bad guys down. Then there's the legion of supercomputers, quote, mining new coins in China and Eastern Europe, and reports of people who threw out hard drives with Bitcoin saved on them, who paid for two pizzas with bitcoins that are now worth $20 million. And as we come to the halfway point in the movie, the price of a bitcoin is again in the ascendancy. But rather than 007 or Jason Bourne, could our hero be a mega-rich, perfectly coiffed bank CEO? After all, it was JP Morgan chief executive Jamie Dimon who recently said Bitcoin was a fraud. Or is Dimon the bad guy here, trying to protect the stuffy world of old school bankers and their rich shareholders from the disruption that would make the world a better place? It's a fun idea for a movie, but that question is all too real. Bitcoin is imagined by its proponents as a win for privacy and for a currency free of government influence. There's no central bank, no official cash rate, no account names. For its detractors, Bitcoin powers a shadowy, quote, dark economy where criminals can operate unfettered, and these central bank tools designed to moderate booms and busts would be useless, meaning that the Reserve Bank and its ilk would be powerless when the next recession hits. And then there are the speculators for whom none of the above matters. The only question is, will it keep going up? I use the word speculators deliberately here. The world can't decide whether Bitcoin is a currency, a replacement for the Australian dollar, Japanese yen, or the like, or a so-called, quote, store of value, more akin to gold bars free from the ravages of dollar-denominated inflation. And even if it could, there's no reasonable basis upon which to value Bitcoin. The strongest bull case on valuation I've heard rests on the fact that the number of available Bitcoins is limited. Therefore, the number of people who want one, the more people who want one, the higher the price should naturally go, which is true if the number is truly limited, and true only if people continue to demand them. The potential or perceived imbalance of supply and demand is what drives most bubbles, of course. When speculators believe there'll be excess demand of tulips, nickel, or lithium, for example, the price rises, often unsustainably, as investors in each of those asset classes will tell you. Foolish takeaway, which is not to say it's a fait accompli. When crude oil was discovered, smart people reasonably deduced it would power the world economy for decades or centuries to come. Others might have scoffed. One man's speculation is another man's fortune or destruction. Buying Bitcoin is the antithesis of smart, deliberate long-term wealth building. The latter will see you get rich slowly. The former will be faster, but in which direction? New report. The blue chips of tomorrow aren't blue chips of yesterday. If you want to look forward rather than backward, we've released our three best ideas for 2017, blah, 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 blah. Scott Phillips is the Motley Fool's Director of Research, blah, fuck you. So yeah, kind of hits the mark on some points, kind of misses it on others. But it's the same. You know, I gotta say, the uniformity of this, of the glitches, the mistakes made in these analyses and these statements, like, this guy doesn't really talk about fiat inflation as a factor in the meteoric rise of Bitcoin's price. And that's a mistake that these fucking people continually make. And he goes so far as to indicate that it's of limited supply, but doesn't acknowledge what the overarching fucking implication there is. That when you evaluate it in a currency without a limit, what happens? It goes up in relative value an increase of actual supply of the fiat currency, or the thing that you're valuating it in, regardless of what it is. You could be fucking selling bitcoins for apples. Okay, the point is that in the real world, there will only be so many Bitcoin ever created. And the rate of issuance of new Bitcoin and the utility and hodling of existing Bitcoin is the rate of inflation in the actual supply in the market is lower and slower than every fiat currency on planet Earth. This is because governments are borrowing the fucking money. Okay, that devalues their currencies. They borrow more of them into existence. And this has been going on forever. But the thing is that cryptocurrencies, above all else, are the most honest form of record that we have come up with yet. Now, banks have already got their fucking editable blockchains, okay? And they're planning to use those between one another and be the miners of their own currency and whatnot, but they're not going to involve you in it, at least not willingly. You know, they might put some fucking app on your phone that comes with your I don't know, with your account from CenturyLink or whoever it is that's carrying your cellular bill. And so when you buy a phone, it'll be in there and it'll be mining away in the background of your phone, and you won't know anything about it. I mean, that's one way to do it. But there again, because you don't have the option of divesting, it's valueless. Your attention isn't a limited quantity. You know, it becomes limited if you have a choice, because you could just as easily say, no, fuck you. I don't want to fucking mine coin for JPMorgan Chase. But if you don't have that option, if they just, you know, gank a few cycles every millisecond out of your phone, what choice do you have? You don't have any choice. So if the places where you do have a choice, though, you will be shorting that fucking coin because it's guaranteed. They'll just refill it tomorrow and you can fucking short it again. You know? And they'll refill it again and short it again. Until you wreck them. You know? And I think that's another point that these banking firms aren't taking into account. Is where they do interface with us, we will wreck them. We've been here longer, and there are a number of us that have been in it a lot longer than any bankers. And it's almost like when the 50s came around and we had the Red Scare, there were actually Russians over here. But what would happen is they would defect. They'd be here for a couple months, they'd get accustomed to the American lifestyle, and then their reporting date would come up and they'd be like, fuck that. I'm going to go to an embassy and rat myself out. Maybe I can stay around here and live like this for a little while longer. I'm certainly not going back to Russia. Well, that's the same thing that's happening in Bitcoin and cryptocurrencies now. That we're having people from JPMorgan Chase and all those guys start up their little cryptocurrency projects and, you know, start it up and try and blend in with us, all the while being funded in the background by JPMorgan Chase, right? But invariably what happens, and what will happen and what will continue happening, is these people will get too good a taste. They'll have it too good. They'll notice that they don't have a lot of the same issues, a lot of the friction that they do when they're dealing in legacy terms. And they're going to want to stay in crypto land. And we will welcome them with open arms. Because we can actually watch what they're doing here, just like we can watch everybody else. Anyway, I want to go ahead and close it out. and I haven't actually picked a song. So, this one is actually kind of traditional, I think, for this particular situation. And but anyway, yeah, I will be available in the Telegram, also on Twitter and Facebook. I'll have this episode up as soon as I possibly can. I am actually recording it. It is actually recording, so we're golden there. But as far as The Last Dance, what should it be? What should it be? I think it should be System of a Down, Bounce. It's nice and short. It's to the point. Anyway, so yeah, we will be back again at 8 p.m. Pacific Standard Time on Monday. So until then, I want you all to enjoy your weekend, and thank you very much for your support. I certainly enjoy that. Anyway, thanks again, and you have a good weekend. Here it is, Bounce, System of a Down, here on Coin Metal.